All right, so we're diving deep today, folks. And where are we diving? Well, we're going into the world of cryptocurrency.
Ooh, exciting.
It is. It
Yeah.
is. Specifically, we're looking at this article about MicroStrategy and their massive bet on Bitcoin.
Yeah, they've really gone all in on it, haven't they?
They have. This article breaks it all down. There's strategy, what could happen, the risks. It's a wild ride.
And I think it's a story a lot of people can relate to. You know, that whole idea of should I put all my eggs in one basket?
Especially when that basket is, well, Bitcoin. Which, let's face it, has been known to be a little volatile.
To say the least, yeah.
So first things first, MicroStrategy owns a lot of Bitcoin, like a mind-boggling amount.
We're talking 386,000 Bitcoins. That's not just dipping your toes in the water. That's like diving headfirst into the crypto ocean.
Exactly.
Uh-huh.
And that right there shows serious commitment. But what's really fascinating is this thing called the market multiplier.
Ah, yes. Essentially, it means that investors are valuing MicroStrategy at more than just the Bitcoin they hold.
Right. Right now, it's at 2.38x.
Yeah.
So their market cap is 2.38 times bigger than the value of all those Bitcoins.
Which tells us that investors believe in more than just their Bitcoin stash. They're betting on MicroStrategy's ability to do something with it.
Use it, grow it, leverage it somehow. And that brings us to, well, the whole concept of this being a leveraged bet.
It is. You buy MicroStrategy stock, you're essentially making a very concentrated bet on Bitcoin going up.
It's like instead of buying a Bitcoin ETF, you're buying a Bitcoin-powered rocket ship.
Hopefully one that goes to the moon, not back down to Earth with a thud.
Exactly. But of course, no rocket ship is without its, shall we say, potential for malfunctions.
And one of those potential malfunctions is something called convertible debt.
Ah, yes. This is where things get a little complex, right?
It can be, but let's break it down. Essentially, convertible debt is like a loan that can transform into company stock.
Okay, so under certain conditions, this loan becomes part ownership of the company.
Precisely. Now, if MicroStrategy's stock price shoots up, which, it could if Bitcoin keeps rising, this debt converts to shares, and that can actually be a good thing for the company.
Dilution and all that jazz.
Right. But on the flip side, if the stock price tanks, well, then that convertible debt becomes a huge, heavy liability.
So it's a bit of a gamble, a high-risk, high-reward situation.
Exactly. And that's why understanding convertible debt is crucial for any investor, especially when dealing with a company like MicroStrategy.
Okay, so let's have some fun. Let's play What If. The article lays out some potential scenarios for MicroStrategy.
Buckle up, folks. It's going to be a bumpy ride.
First up, the dream scenario. Bitcoin hits $500,000. Market multiplier stays about the same, nice and steady. What happens?
Well, in that sunshine and rainbows scenario, MicroStrategy's stock price, it could go to $1,733 per share.
Cha-ching. But hold on, let's be real for a second. Is it safe to assume that market multiplier will just chill there?
You raise a good point. Investor sentiment is fickle, right? It can turn on a dime.
Even if Bitcoin goes up, people might get spooked, lose faith, and that multiplier could shrink.
Absolutely. It all depends on whether MicroStrategy can actually deliver on their promises. Show that they're more than just a Bitcoin piggy bank.
They got to prove they can actually make magic happen with all those coins.
And then there's the, shall we say, ultra dream scenario.
Go on. I'm listening.
Bitcoin doesn't just hit $500,000. It goes full supernova and reaches a cool $1 million.
Well, hold on. That's like life-changing money for a lot of people.
And if that happens, then the market multiplier goes even crazier because, well, everyone's lost their minds over Bitcoin. MicroStrategy's stock price could potentially soar above $3,000.
Okay, now we're talking serious money. But, there's always a but.
There's always a but, isn't there?
What if the music stops? What if Bitcoin, instead of going up, goes down?
That's where the real risk comes in.
Let's say, just for fun, that Bitcoin crashes back down to $20,000.
Right.
What happens to MicroStrategy?
That's not a pretty picture. They might have to sell all their Bitcoin just to cover their debt.
Liquidate everything. Yikes. And the stock price.
We're potentially talking near zero. It's a stark reminder that these kinds of bets can go either way.
High risk, high reward.
Mm.
But let's not get too apocalyptic. What if Bitcoin drops, but not to $20,000? Let's say it goes down to $40,000. Still a big drop, but not a total disaster.
In that case, assuming the market multiplier doesn't come to the rescue, the stock price could plummet to around $67.
Ouch. Still a significant loss for anyone who bought in at a higher price.
It underscores the volatility inherent in investing in, well, anything related to Bitcoin.
So all this talk of risk and reward,
Yeah.
it makes you think. Let's talk about some of the specific risks the article highlights. First up, debt management,
Right. MicroStrategy has a hefty $7.3 billion in debt.
which if Bitcoin's doing well, they can probably handle.
But what if Bitcoin stagnates? What if it just sits there at, say, $30,000 for months on end?
Can they keep up with their loan payments? Can they keep the lights on?
That's the question investors need to ask. It's all about understanding their operational costs, where their revenue comes from, and how that all plays into their ability to service their debt.
And then there's the big one, the fact that their entire strategy relies on Bitcoin.
They're all in, one single asset. Now, diversification is usually the name of the game in investing.
Don't put all your eggs in one basket. That's what they always say.
Exactly. But some investors would argue that a concentrated bet on something with high growth potential can outperform a diversified portfolio.
So it's like, play it safe, spread the risk, or go big or go home.
That's the dilemma. Ultimately, it comes down to individual risk tolerance. How much are you willing to lose? And what are your overall investment goals?
So as we wrap up this deep dive into the world of MicroStrategy and their Bitcoin bet, here's a question for you, our listeners. If you were an investor, what would you consider before putting your money into this? What else, beyond just the price of Bitcoin, could determine their success or failure?
Think about it. Don't just get caught up in the hype. Look at the fundamentals. How sustainable is their business model? What's their plan for navigating different market conditions? These are all things to ponder before making any decisions.
Wise words. Always good to do your research, folks. And on that note, we'll leave you to ponder. Until next time.
Happy investing.